Solana is about to tank below 20 cents. So if you are holding Solana, be on high alert because of a particular chart pattern that we're going to cover today. So if you like today's content, like, subscribe, hit the bell notification, give me a thumbs up. I'm Jigab, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive in to Solana. Now, overall, on a macro scale, I think Solana is going to do well over the months to come. But over the next few days and weeks, we're probably going to see the price go down. And let me tell you why. So our analysis on Solana has just been on point since last year. If you go back and see my videos last year, June, July, we pegged this bottom over here, anticipated this wave 3, bump, 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 5-wave sequence, textbook, mwah. Elliott wave doesn't get much better than that. We projected this top in advance because of the pattern, the price, the time, the momentum position, and we got a really big correction. I was anticipating just an A, B, C correction, but it went really, really deep, and we're down here. So macro picture, before I cover the doom and the gloom of what's likely to occur over the coming week or so, is the macro picture is this, right? So we're all on the same page. Macro picture is this, which is the latter part of 2022. But what we're going to focus on today is really this last part of this major correction. This last part of this major correction, which I've got labeled in blue. And I'm just going to show it to you like this so you're really, really clear. This last part, we've probably got one more leg to the downside based on a particular chart pattern. And by the way, if you're not used to ABC corrections and Elliott waves, I've got a free Elliott wave Fibonacci Masterclass. It is the best. I'm telling you, you'll love it. It's free. So you'll get to really learn the 3 key rules of Elliott waves and how to read the markets like a pro, because there's patterns that unfold time and time again. And I'm going to show you one of them right now because it is so, so important that we pay attention to this. Now, we can only ever do probabilities and never certainties, but the probabilities of what I'm about to show you is pretty high. And I'm going to show you why. So we've had this movement to the downside with Solana. And then we've had this movement up and then down. So what I'm going to do here, and I want to make this really, really clear. I'm going to take the data back to just here, right? I'm going to really zoom in like this and zoom in. Now at this point, Solana is looking good. It's looking healthy. It's made a bullish reversal on the momentum. So the blue line's above the red. So that's looking good. And what we want is follow through, right? The buyers, the bulls really driving the market up. And that's what we're looking for. And follow through looks like this. Boom, right? Aggressive, nice movement to the upside. That's what we're anticipating. What does Solana do? Well, Solana, and forget that it's Solana for a second. This is just the psychological buying and selling mood, psychological mood of the buying and selling behavior of everyone that's participating. It went up, so it made a slightly new high. So it's still at this point, still looking good. Like, all right, we expect Solana to really take off. Still looking pretty decent. But then it overlaps. You see, when a price overlaps into the closing range of the previous wave, so we've got this wave, it might be easier if I show you on a line chart. This closing data, it overlaps back into that closing. That's not healthy. That's not healthy. And then it moves back up. So that alone is a signal that we might not get the follow through immediately that we're anticipating. Now, this is even clearer to see on a lower degree time frame. So let me just show you what I'm anticipating will happen. And now I'm looking for shorting opportunities. And one of the key indicators also is the momentum is something called oversold. In other words, so overbought. In other words, it's above this black line, above the 75, which means we're anticipating it's more likely that we're going to get sideways to down for the next few days. And that lines up with this overlapping structure. So I'm going to drop into an hourly chart. Right, I keep that in the bottom right hand corner. And what do we have here? Well, this is the pattern that I'm referring to. We had this nice movement up. It was pretty corrective, but it was still, we didn't know what it was at this time. A nice correction down, a pretty decent move up, but then it overlaps, right? It overlaps. That's a sign of weakness. Now, it doesn't mean it's guaranteed to, make a new low, but what I'm waiting for now is the new pivot high or swing high is here. If Solana overlaps again, that's another real signal that it's not looking healthy. It's not looking strong. Looking like the sellers are stronger than the buyers. The bears are stronger than the bulls. So the bears claw the market down, right? That's why it's called a bear market. So when the sellers overtake. So if, and it is an if, and I've got a price alert. You see this line over here? You'll see I've set a price alert. In TradingView, you can right click and add a price alert. I'll get an email to say, look for a short position if Solana goes below this. In other words, overlaps onto the previous swing high. I will then wait for a reaction, some type of correction, and then look for a nice shorting opportunity. Because if it does do what we're anticipating, we're talking about Solana going down to the typical correction, the typical next range is 21 to 15 cents. And that's the reason I said it's likely that we're going to see Solana go below 20 cents because we've done an external retracement. The external retracement, by the way, if you're not familiar with it, is a relationship between a corrective sequence and the next move to the downside. And I cover that in my Elliott Wave and Fibonacci Masterclass, which really covers not only the pattern positions, but also how the waves relate to Fibonacci ratios and the relationship. And it's the psychology that's playing out. And it allows us to be 2 steps ahead of the market so we can really time our buying positions, wait for the high probability optimal conditions, and where to adjust our stop losses, etc., etc. So if you want to learn about Elliott Wave Fibonacci, take the masterclass, enjoy it, take loads of notes. It's absolutely free. You do have the opportunity to buy one of my courses where you'll get an invite to my private Telegram. We got an R15 crypto gym. We are literally doing daily workouts with different cryptos. At the moment, we're focused on the BNB coin. I'm going to be planning a few extra workouts. Solana's on my hit list, and possibly Ethereum is another one that I'm looking at as well, just to add more value. So if you want to join, you can purchase one. I've got some huge discounts at the moment with my courses, but you'll see that after taking the masterclass. So like, subscribe, hit the bell notification. Let's finish on a quote. Let's go with, we'll go with chapter 5. We'll go with chapter 5. Chapter 5 is, do you know what it is? Do you know what it is? It's Leonardo da Vinci. Simplicity is the ultimate sophistication. Now, some people ask me, I had a workshop this morning. I run Saturday workshops for all my private Telegram community, a phenomenal community that have purchased my courses. And I do a Saturday workshop. We do live TA. I was covering some extra key strategies today. And someone asked me about some extra technical indicators. And my response was, there's loads of indicators. There's volume, there's RSI, there's Bollinger Band, there's this pattern, that pattern, there's moving averages, the 200, the 100, the exponential moving average, there's the golden cross, there's so many things out there. I'm of the personal belief that less is more. What's the 20% that's going to give me 80% of the results? 20% that's going to be 80%. So I like to keep it really simple. Look at momentum on 2 time frames. We look at pattern of Elliott waves on multiple degrees of counts, ideally a minimum of 2. We look at Fibonacci price and Fibonacci time. And that is a strong edge where you become the casino where you can make profits, make it on the markets going up and markets going down using something called futures trading. So take the masterclass, enjoy it, give me a like. I appreciate you. Join me tomorrow. We're going to look at a few different coins. But Solana potentially is looking good for a short trade setup. But again, we want to wait for the overlap. That's a signal. Wait for a pullback, ideally ABC correction, momentum, pattern price, daily and a lower time frame. And then we can look to take a short position. But we'll keep a close eye. All right, see you tomorrow.